Inventory on the US housing market is exploding in a record fashion right now. Data from Realtor.com shows an amazing plus 100,000 homes for sale, aka the inventory on the market in June 2022. That's following plus 100,000 in May as well. These two figures, according to Realtor.com, are records in their data set. This means two things for you as a potential home buyer. Number one, way more selection on the market, which is great news. But number two, we're gonna see massive price declines going forward. That's because the more that inventory piles up, the more sellers that are desperate to list, the more they're gonna feel like they need to cut the price in order to sell. Like on this listing in Phoenix, it was advertised as a 72-hour home sale. Well, 13 days later, it's still sitting on Zillow and they just had to cut the price by $25,000. Or on this listing north of Austin, they just did a massive $44,000 price cut in the middle of June, and 2 weeks later, it's still sitting on the market with no interest. And this is what the start to a housing crash looks like, specifically in certain cities, because the inventory gain we're seeing in specific cities across America right now is mind-bending. No one thought homes for sale could pile up so fast in a market like Reno, Nevada, where year over year, there's a 187% increase in the amount of homes on the market. And in just the last 4 months, the inventory's gone up by 4x in Reno. And as this video goes along, I'm gonna cover more and more cities with the largest inventory increase, because these are gonna be the ones that are going to crash first, that you need to be scared of buying right now, but then potentially target over the next 1 to 2 years for discounts. But before getting into the rest of those cities, I wanna address a point, and that's that no longer can realtors and real estate investors try to FOMO you into buying into the housing market by saying inventory is low. For the last 2 years, we've just heard that repeated consistently. Inventory is low and thus prices will keep going up. Well, folks, that is no longer true in certain cities in America. When you see the inventory and the homes for sale on the market getting back to the levels it was 2 years ago, well, that's a sign that not only has the market normalized, the market is tilting into a crash, because we're only in the summer right now. Normally, historically, across the US housing market, inventory peaks in September and October. So we have another 3 months to go at least of this inventory and price cut pile up across the US housing market, but as I said, in specific cities. And one of these cities would be Austin, Texas, where in the last 4 months, there's been a 300% increase in inventory, and now we're basically back to the levels it was at the start of the pandemic in 2020. And you might be asking yourself the question, how is this possible? How could inventory be increasing so fast in just a matter of months? And the reason is pretty simple, everyone. The housing market is in a massive bubble, and when you increase interest rates during a bubble, as the Federal Reserve is doing at a time when the economy is tilting towards recession, this is what the outcome is going to be. If you've been someone who's watching my channel over the last 4, 5, or 6 months, you're going to understand why this is happening. Because as I told you all back in January, all of a sudden when interest and mortgage rates go up, that adds a dose of urgency to the US housing market. Once the housing market and the psychology shifts, which I believe is going to happen in 2022 at some point, we're going to see inventory go up very, very fast. And there's really one data point above them all that clued me into this housing bubble and the housing crash and why inventory was going to surge so much, and specifically in the cities it's surging in right now, like in Austin or Reno or Phoenix or Boise. That metric that you all really need to understand and track going forward is what I call price to earnings ratio. It takes the typical home value in a market and then divides it by the average worker wage in a year. And this gives you an idea of how over or undervalued a housing market is. I'm gonna use Seattle to illustrate this, another housing market which is crashing before our eyes. You can see the ratio of home prices to earnings in Seattle went up to 11.3 in May, basically taking a typical home value of $795,000 and dividing it by the average worker earnings of $70,000. We know that this is a bubble in Seattle because the long-term historical average price to earnings ratio is only 6.9x. So when the PE ratio goes way above the long-term average, that's a sign of a bubble and impending crash. And in this sense, folks, understanding the housing market is actually pretty simple, because over the long run, over 100 plus years in America, there's a very stable relationship between home prices, wages, and inflation. Generally, the three of them tend to move together, and if one of them goes way above, like for instance, home values went way above inflation and wages in '06, well then home values are going to need to come down back to the underlying levels dictated by wages and inflation, and we're in the same situation here in 2022, and the same thing is going to happen. Home prices are going to crash. The other thing you need to think about here in terms of explaining this inventory increase and why I believe this inventory is just going to keep piling up is all of the home building in America right now. Home builders are building a record 1.7 million homes actively under construction, with another 300,000 permitted and ready to be built. That's nearly 2 million housing units in the pipeline, a record high, and especially in certain cities, that's a record high. Like if we take a look at the permitting of homes and apartments in Dallas, Texas, you can see over 70,000 permits pulled in the last 12 months. That's even higher than the level in 05-06. At the peak of the last housing bubble. Nashville, Tennessee is another market where they're just building so many homes and apartments. Roughly 30,000 permits pulled over the last 12 months in Nashville, when the previous high was like 16,000 in the last housing bubble in 05-06. And especially when you have these homes kind of being delayed with their completion due to labor and material shortages, it creates a situation where they're now all going to be delivered around the same time in the second half of 2022, in the first half of 2023, and that's what's going to cause inventory to continue piling up, which is why if you're a home buyer looking in today's market, I believe you should wait it out, because even though inventory has already started to surge, it's going to keep surging, and you're going to have even more selection and even better deals over the next 6 to 12 months, especially if you live in one of these like hot Sunbelt housing markets where there's so much home building, where all these investors are. These are the ones that are crashing first. They're going to have the best deals going forward for people who are patient and save their money. And if we zoom out and look at this map, which shows the inventory growth, homes for sale growth year over year, the areas in orange have the biggest increase. And you can see, as I just said, primarily they're in the South, Southeast, Texas, and the mountain regions of America, as well as California, where the inventory buildup is just epic. But looking at this map, you folks can tell that there's a lot of differences around America. You know, while inventory in Raleigh is up 112% year over year, inventory in Hartford, Connecticut is down 20% year over year. While inventory in Boise, Idaho is up 130% year over year, it's actually down 13% in Chicago. And so what this means, and what you all need to be paying attention to, is that we're entering what's called a bifurcated housing market right now in 2022. And this is what tends to happen at the beginning of a crash, is that it's not a uniform crash everywhere across America. It's certain cities that were in the biggest bubbles that go down first, much like over the last 18 months, how certain technology stocks started going down by 50, 60, 70% in 2021 before the broader market went down. Well, that was a sign that the stock market in general was going to go down, but it started with the most speculative assets, you know, companies like Robinhood and Opendoor and Zillow. They went down first. The analogy with the housing market is that cities like Austin and Phoenix and Boise and Reno and Seattle, they're going down first, but eventually this crash is going to spread everywhere. We're not going to see the Midwest and the Northeast stay tight on inventory forever. Eventually, we're going to see in Illinois and New York and Massachusetts and Vermont and New Hampshire, we're going to see inventory go up as well. And to finish off this video, I want to leave you all with an actionable insight. How do you take the data that I'm showing you here and determine what the right move is for you as a home buyer or real estate investor? Well, to figure that out, you actually need to ask yourself two key questions. Number one is, if I buy a home today or in the next 6 months, how long am I going to stay in that home? Am I going to be there for 3 years, or am I going to be there for 10 years? Because if you're going to be there for 3 years, I don't think you should buy today, because there's a good chance that you're going to then be selling into a down market and you're going to have some trouble. However, if you're someone who's going to stay in that home for 10 years, like you truly find a home that you like, I think you can justify buying today. But if you do, you need to ask yourself a second question, and it's this: will I be able to mentally and financially withstand a 20% decline in values from where I buy today? Because values in America will be going down, not just over the next 6 months, but I believe over the next several years. Housing crashes tend to take some time. So if you buy today or in the next 6 months, it's likely that the value of your home will keep declining after you buy it. Now, you might be okay with that if you find your dream home, right? If you find your dream home and you're going to stay there for 10 years, you might not care. But I suspect a lot of you will end up caring if you buy a house and you see the value of it consistently decline after you buy it. Because I'm going to leave you with this, everyone. This inventory surge we're seeing right now is just the start. In only 2 to 3 months in certain cities in America, inventory has tripled, it's quadrupled, it's up 100 to 200% year over year, and nothing that bad has even happened in the underlying economy yet. Like, we still have a 3.6% unemployment rate. As we enter a recession, more and more people are going to lose their jobs, and as a result, inventory in the housing market is going to surge further, just as all these home builders deliver the massive backlog of homes. And oh, by the way, 20 million homes in America are owned by real estate investors. Another 5 million are owned as secondary vacation homes. That's 25 million homes, 1/4 of all single family homes in America, that are owned by people who don't live there. That means that as the housing crash continues and gets worse, there is unbelievable potential for an endless stream of inventory to just continue hitting the market as investors attempt to sell out of the market and achieve top dollar, as people who own second homes say to themselves, okay, it's not worth owning a second home anymore as values are declining. So there's a potential here, folks, that not just for a year or two, but for 5 years, for 6 years, for 7 years, inventory keeps building. If you want to learn more about the shadow inventory surge that's about to hit the US housing market, click the video you see here on the screen in front of you. I use hard data to find the metro areas that have the hidden inventory that's going to be coming on the housing market over the next couple years.